Okay guys, today I'm going to show you guys how you can actually scalp the boom and crash market, and how you can cash packs on the boom and crash market when it's time for you to make an entry and when it's time for you to exit the market. So guys, so all you just have to do is just sit back, relax, watch this video with a lot of understanding, pay much attention, because you're actually going to learn a whole lot today which you can use in making money for yourself on forex. So guys, if you're watching this channel for the first time, I'd like you to hit the like button, subscribe to this channel, leave some sweet comments, and don't forget to turn on your notification whenever you can, so you can always have new videos from me whenever I post them online. So first of all guys, before we start, I would like you to check on the description page. You'll see a link to my Telegram group. You can click the link and join. It's a free channel. I drop signals there, and I won't lie to you, I don't drop signals there every day. But if you want an everyday signal and everyday profitable signals, I advise you join my VIP. My VIP channel. To join my VIP channel, you have to chat me on WhatsApp. Check on the description page, you'll see a link to my WhatsApp number, and we can talk. And I'll tell you how you can join a VIP so you can start making money for yourself on forex. Okay guys, so let's start. So first of all, let's start with catching spikes. First of all, if you want to catch spikes on the boom and crash market, it depends on which of the pairs you are. If you're on boom or if you're on crash. Okay, for example, now we are on crash 300, and let's say we want to cash spike on crash 300. Okay, first of all, before you do that, okay, you have to be sure first, because the market structure is very very important. Okay, this is crash and you're trying to cash spikes. If you're trying to cash packs on crash, you have to be sure that the market is on a downtrend. You have to be sure the market is on a downtrend before you even think of going to the market on crash to cash packs. If the market is on uptrend and you're trying to cash packs, I bet you end up losing money. Not as if a spike will not come, but it might not come often. Okay, it might just come once, and it takes a longer time before it comes again, and by that time you are losing a whole lot of money. So to be sure, and to be on the safe side, for you to catch series of spikes, okay, you have to be sure that the market is on a downtrend. And when the market is on a downtrend, it's very advisable that you go in and start trading to cash packs, because before the market actually goes down that way, making it a downtrend, that means there are series of spike, because it's that spike that is pushing the market down. On crash is only a spike that will happen before it gets down. Okay, if a spike doesn't happen, that means it's still going up, but when a spike happens, that means it's going down. So when you see the market on a downtrend, that tells you that there are series of spikes, and it's safe for you to go in the market and start trading. So how do you know if the market is on a downtrend or is on an uptrend? Okay, first of all, to know that, you have to go to a longer time frame, maybe like the 4 hour time frame, but I like using a 1 hour time frame. So we go to the 1 hour time frame. My screen, if you're using a smaller screen like this, all you just have to do is you zoom in or in. Okay, zoom in or in. So at the moment, I'll tell you that the market is on a downtrend at the moment. Okay, and how do you tell a market is on a downtrend? Okay, this is how you tell a market is on a downtrend. This is it. Okay, this acts like our the first low. Okay, let's take this to be our first low. Okay, so after this, we had our first low here, and you see that there was a spike here, and the market came down to this level. Okay, the market came down to this level, and it you know you know went up again. and when it got to this level, we had some spikes that drew it down back here. So as you can see that when the market got up to this level here, okay, it couldn't break the previous high, which was this was our first high, the first high we had. And you see there was another high here, but this one wasn't strong enough to break the previous one, so that makes it a lower high than the previous high. As you can see, it happens again here. The market gets up here and it couldn't break the previous high. Okay, it couldn't break the previous high. Instead, it was lower than the previous one. And the same thing happens here, and it happens here, happens here. Okay, so that tells you that the market is actually on a downtrend. As you can see, our latest high is not longer than our first high. So that tells you the market is on downtrend. So when you see stuffs like this happening, this tells you that the market is on a downtrend. Okay, it's on a downtrend, so it's safe at this moment for you to make your entry. So now you're trying to cash backs after analyzing this. Like I said, before you analyze this, to be sure, don't use a 5-minute time frame, don't use a 15-minute time frame. Use the 1 hour or a 4 hour time frame to be very sure, because those time frames are not strong enough. The 5 minutes time frame cannot really tell you if the market is actually on a downtrend. So use a 1 hour or 4 hour time frame to analyze this, and after that you move down to your 1 minute time frame to make your entry. Okay, so after moving to your 1 minute time frame, okay guys, so now you're trying to cash spikes. Okay, so what you do is, first of all, you need your lines. Okay, so you see at this level here, this level here, there was a spike here. As you can see, the market got up to this level, and there was a spike, and the market came up to this level again, and there was another spike here. Okay guys, so what you should be expecting at this level now is, you're expecting sorry about that you're expecting this market to get up to this level again, so you can actually have another spike here. Okay, so now you place your line at this level, making it your resistance level, because you got a spike here, and you got another spike here. So now the market start coming up here again, so you were actually expecting another spike here, but unfortunately the market didn't get up to this level. Instead, it created a spike at this level. So when that happens, what you do is, you move your line down to this level. Okay, you move your line to this level here. So there was a spike here, and it created a longer spike. After this, another spike happened here. Okay, so now placing your resistance line here, because there was a spike here, so you're actually expecting another spike to happen at this level. Please guys, I hope you guys are concentrating. I won't want you to make any mistake. So there was a spike here, so what you're expecting now is for you to have another spike at this level. Okay, so when the market start coming up like this again, you don't just start placing your trade at this level. You don't make your entry around here, because it will be a very wrong entry, because even if a spike happens, it might not be long enough to close out these pips here. So that means that you end up losing money instead of making money. Actually, you have a spike, but you are not making money with your spike. So all you just need to do is you wait for a candle to this resistance level, a candle to, after these candles are forming 1 2 3 4 5 6, you wait for the 7th candle that will get to this level, and when that happens, you place your trade, you sell. Okay, you sell at this level, so that even if it happens that after selling that the candles now get to this position and you didn't have a spike, it gets up here with another candle and there was another spike, that is when you exit your trade. And you exit with a little loss, because it will only be two candles that you are losing, and two candles might not even take up to $2 depending on the loss size you are using. And I always advise, if you're trading boom and crash, don't use a bigger loss size, because if you're actually trading against the spike and a spike happens and you were losing a bigger loss size, that means you end up losing a whole lot of money. So it's always advisable you lose a smaller lot size that won't take so much money from you. Okay, so now we're expecting another spike here because we had a spike here. So that means this position here is a strong level. So like I said, where you're having a spike, those positions there are a strong level. It's a strong zone, which means it's kind of a resistance level that the market is trying to break but can't break it at that level. So when it gets there, there was a pullback and a spike happens. So now, because we had a spike here, so we are actually expecting another spike at this level again. So now when this candle start coming up like this, and you have a candle to the resistance level, which is the line you're having here, that is when you place your trade, you sell. So as you can see, after selling, there was a spike here. And so just because you were using just a one candlestick to this line, because of the risk management you're applying, you don't want to lose much but you want to make much. Okay, so now you just wait for a candle to this position. As you can see, just a candle to this position, there was a spike here, and a spike happens and it was longer than this candle you were seeing here. So that means you are making profit. But if I thought you had entered this trade at this level, okay, this let's take this to be your entry. As you can see, they start coming here and a spike actually happened like you expected, but you can see it was not up to this level. So that means you'll still be on loss. So it's advisable you wait, okay, when it's just a candle to this this resistance level here, you place your trade, you sell. As you can see, there was a spike and you'll be in profit, and when that happens, you exit your trade with profit. And when you do that, you wait again to also catch another spike again. So you now wait again. As you can see, the candles were coming up again, and when it gets to this level again, there was another spike. Okay, there was another spike. So that means you are making a whole lot of money for yourself while risking very little. So why you have to wait for just a candle to this line is because you don't want to risk so much in case the spike doesn't happen. And even if the spike happens, sometimes it might be a very short spike and it doesn't get to your entry. That means you'll still be in loss. So now it's advisable you wait just a candle to this level here, and if it happens that the candle gets here and it doesn't spike and it breaks this position with another candle, doesn't still spike, that's when you close your trade. You're losing only two candlesticks, which is not up to $1 or $2 depending on your loss size, like I said. So but if it happens and there's a spike, as you can see, this is your entry and this is the outcome. As you can see, you're making a whole lot of profit. So okay, so after that happens, immediately this spike happens, that's when you exit your trade. Okay, that's when you exit your trade, and you wait for the candles to get up to this level again. And as you can see, there was no, it didn't get up to this level again. There was a spike here. Okay guys, there was a spike here. So now this now turns to another resistance level, which means you're expecting another spike at this level. Okay, so as you can see, the market now came up to this level again and there was no spike here. The second candle formed and there was no spike. Then you close your trade. That's the risk management you can apply on this trade. You apply very small, like apply very small risks to make a whole lot of money for yourself. As you can see, just two candlesticks. If this happens, because this is your entry, if it happens and it breaks this position and this happens again and there's no spike, you close your trade. So guys, this is very simple. I've used this strategy and it's working very perfectly fine for me. Let me show you another example. Let me show you another example. Okay, this is another example here. It's another example here. If you try this strategy, I promise you, like, if you try this 10 times, I promise you, you're going to make profit 8 times, probably lose 2 times, because I can guarantee you that it will work 20 times of the 20 times you're trying. You try 20 times, you make profit like 18 times, and you lose 2 times. And you can see the math, you're making money instead of losing. So as you can see at this position here again, you see we had, as you can see, that series of spike at this level, which means this level is a very strong position. Okay, it's our resistance level. Okay guys, it's a resistance level which we have series of spikes happening. So as you can see at this level here, there was a spike here. Okay, because this was your entry. Like I said, a candle to the resistance line, it's your entry. So if the first candle happens and finishes without giving you a spike, you wait for the second candle. The second candle finishes and it doesn't give you a spike, then you close, then you end up losing only 2 candlesticks. So if the first candle finishes and the second one came out, as you can see, after the second one finishes, there was a spike here and a very long one. Okay, so when this happens, you close the trade and wait for the candle to get up to this level again that you had this line, because this is a resistance, this is your resistance, and we're actually expecting spikes. So you wait. Okay, so now you don't make your entry at this level. I'm saying this again, please pay more attention. You don't make your entry at this level, because if you enter from this level, it's risky, because you might actually have a spike from where you're expecting this spike, but these spikes might not be that long. As you can see, we have a short spike here. So if your entry was here and you have this kind of spike, it means you are still in loss, you are still losing, you're not making money. So it's advisable, like I always say, you wait, because patience is very, very important in trading. It's very, very important in forex. You wait. So after having this first spike, what you're actually expecting is another spike at this level. So what you do is you wait. The moment you have a candle, just a candle to the resistance line, just a candle, that is when you place your trade. This should always be your entry. A candle to the resistance level where you're expecting a spike. So if after the first candle finishes, as you can see, the second candle gave you a spike here. So but if the second candle did not give you a spike, you close your trade and you lose very little. But if it happens and you have a spike, as you can see, you are making a whole lot of money for yourself. And when this happens, immediately after the spike, you close your trade and you wait for another spike still at this position. So you wait again. When you now have a candle to this resistance line again, you now place your trade, and what happens? You have another spike here, and what happens? You close your trade. Okay guys, close your trade and wait for another spike here. So when it's a candle close to your resistance level again, you place your trade and you have another spike here. Okay guys, so you can see from here, as you can see from here to here, you are making a whole lot of money for yourself. You can imagine how much you make from these 3 spikes you have in here. It's a whole lot of money, guys. So it's very simple, guys. This is how you cash spikes. Just try this on your trade, and okay, I can bet you try it on your demo account first. When you're more comfortable with it, you can now switch to your real account, and I guarantee you that you're going to make money for yourself. So even when you lose, you will lose very little, because you're applying a proper risk management that will make you not lose so much money. But when it goes your way, you make a whole lot of money. So now after the spikes might have happened, you now still wait to have another spike. And one thing you have to also notice is when you're having these spikes, also look at the length of the spikes. Okay, also look at the length of your spike. As you can see, sorry about that, also look at the length of your spikes, guys. Also look at the length of your spikes. As you can see, the first spikes you have here was longer than this one. This one is shorter than the previous one, and this one is shorter than the previous one, and this one is shorter than the previous one. This tells you that the spikes are no more long than before. Okay, they're no longer than before. It's becoming shorter, so that means a spike might not really happen very soon again, because it's going shorter than the previous ones. So at this time, if I were you, I would not enter the trade again, because what I'm seeing here, I'm having shorter spikes than before. So that means the strong that spike strength is not that strong again. So it will be risky if I'm still trying to catch a spike again, because even if I have a spike, it will be a shorter one than this one, which will not really give me enough profit. So at this point, I think I'll close my trade and I've made my money for the day. Okay guys, it's very simple guys, it's very simple. Just watch this video, watch it over and over again, and you will really understand what I'm talking about. Okay guys, it's very simple. It's one of the best strategy you can see anywhere. You can't see this anywhere except here, and it's one of the best you can find anywhere. So guys, just try this on your trade. It helps you understand how to apply proper risk management, because you don't just enter a trade anyhow. It tells you where you should enter your trade and how you can apply a proper risk management. Okay guys, you only lose 1 or 2 candles if a spike doesn't happen. Like here, okay, let's just say we were expecting another spike at this level, and this was our entry. It happens, there was no spike, and this happened, there was no spike. You close your trade. Okay, as you can see, we tried this here and it all happened, it went our way. So you can see we made a whole lot of money from here, and we only lose a little here. So guys, this strategy is very powerful. All you just need to do is just apply it on your trade, and I guarantee you're going to make a whole lot of money for yourself. So now let's talk about how you can actually scalp. Okay, because I was telling you how you can cash back. Now I'm telling you how you can scalp. It's still the same strategy guys, it's still the same strategy how you can scalp. So all you just need to do is, after you have a longer spike like this guys, after you have a longer spike like this is where you're actually expecting the spike. Okay, so now you're trying to scalp. What you just need to do is, after the spikes happens, what you do is, you wait for probably this first 2 candles to happen. Okay, after a spike like this, you wait for these 2 candles to happen before you start scalping, because most times after a spike like this, you can have 1 candle here and another spike happens. So to be sure, you have to wait for at least 2 candles to form correctly before you start scalping. So after these 2 candles that might have finished forming, you now scalp. Okay, I always advise you scalp and you take just 4 to 5 candlesticks, like 1 2 3 4 5 candlesticks. And if you want to hold, you don't just need 4 or 5 candles, you want to hold for a longer time. The moment it gets to where you're having this spike, like this should be your take profit. The last candle here, like the second to the last candle where you're expecting a spike, should be your take profit. So when it gets here, you close your trade, because the moment it gets to this level, there might be a spike. Okay, and if a spike happens, that means it takes all the profit you made and you go into losses. Okay guys, so you take, after you waited, after the first 2 candles has finished forming, you now enter, like you buy. This should be your entry. The third candle should be your entry, and after the entry you take 5 or 4 candlesticks. And if you still want to hold for a longer time, the moment it gets to this position here, you close your trade. And after that, as you can see, there was a spike, and after the spike, you will also wait for another 2 candlesticks to finish forming, then you enter the trade again. This should be your entry, and you pick 4 or 5 candlesticks. If you still want to hold, you hold till when it gets to this level here. This should be your exit level. So once you get to this level, you close the trade. As you can see, there was a spike, and you continue doing that over and over again. So guys, it's very simple guys. Just try this on your demo account first. Like I said, if you're not too sure, then after that you can go down to your real account and start making money for yourself. So guys, thanks for watching this video. I hope I explained a little bit better for you guys to understand. And if you don't really understand, Are you having difficulty trading, having difficulty making money on forex? I advise you, you know, check on the description page. You'll see a link to my WhatsApp group. You can talk to me directly. Let's share ideas on how we can actually make money on forex. Hit me up. I do account management also. I can manage your accounts and give you some good earnings every single day. And also I run a mentorship program. If you're new in the forex industry, or you've been in the forex industry for a long time and you're struggling, you can also apply for your mentorship, and I'll guide you and teach you what you need to know to make money on forex. Okay guys, thanks for watching the video, and please don't forget to subscribe guys. Subscribe and like the video. See you some other time guys. Bye.